Check, check. What's up, team? How's everybody doing this evening on a fine Tuesday? Ash, good to see Elvis STE619. Tim, full port, you're out of here. Not just kidding, buddy. Hopefully you're kidding. Rev, Rena, Mooney, good to see you. Christian, everybody. Glad to see the regulars. Glad to see some new faces, hopefully. You guys are new from the sale. Hopefully you will learn something, how to survive this crazy market and not stop out of your port in a week. Yeah, ST. Yeah, man, just hang in there. It's your money. I gave you my advice. You just have to kind of roll the punches and do what you decided on it, So full port in GameStop, worth it. Well, everybody went to full port DJT or whatever it's called on what, Monday? How'd that go for everybody yesterday? Calls it open. Oh man, ouch. Yeah. You never want to ask me that question, guys, because I'm the most, well, not the most, one of the most conservative traders out there. I don't chase that stuff. I chase or I get into trades that have a little more structure, a little more of a game plan, stuff like that. So you're never going to see me, you know, GameStop, whatever it is, AMC, but to each their own. But that's just not me. It's not my cup of tea. Christian, about to blow your account. Well, hopefully not. All right, we got 29 people in here. It's 5:06. Um, Killer, I've been aiming for 3% a day when you told me I've been up. Yeah, exactly. And I'll kind of show you guys some examples. Obviously, some examples are in hindsight. It's a few slides, it's not too many, maybe 10 or 15, because if you're like me, I'm a visual learner. I want to see what's in front of me when someone's talking about it. So that's the point of these slides tonight when I go through them. So hopefully it's not too boring for you guys. I'll have a nice charting example towards the end on hedging, stuff like that. But position sizing and hedging, you guys, other than charting, that is, this is step one. This is how, day after day you build a trade plan. You cannot skip these steps. You can't take a losing trade, in the first hour, and then you go, okay, I'm down $300. I took a 20% loss. So this next trade, I'm gonna go heavy. I'm gonna try and make it back. We have to stick to position sizing every single time because um, it's just important because this is a long-term game. Whether you have a 1 month membership, hopefully you got longer than that, but you're not going to get rich in a month. You might get lucky, but most likely you'll probably fail if you full port stuff because, I've said it many, many times. The market doesn't care if you come to OT and you have 3 years of losses stacked up, or 3 weeks or 3 months, whatever it is. The market doesn't care. The market doesn't care if you took your last 3 trades you took were losses, whether they're alert trade ideas or your own. You have to stick to position sizing if you want to get a grasp on your portfolio and start building it up. And so, again, using risk management for proper entry size and how it might vary on type of trade. This is very important too. When I show you kind of the percent entries, this is just what works for me. You can ask another trader, and they may give you a little bit different numbers, but smaller ports, we got to kind of stick to these numbers I'm going to share with you guys. And then as your portfolio gets bigger, it may not make sense, but when I kind of tell you why, you can reduce your risk even more each and every time because, the big firm traders, stuff like that, they're not going, oh, I'm 10% position size in this and this. It's like they are taking such a small risk on these huge portfolios. If they have, or not even portfolio managers, there's people that have, $100,000 portfolio, 200,000. It's like, if they take a 1% position size, like that is a huge number, but a 30% gain from that is massive. And so it's going to change a lot, but you guys just starting out those smaller portfolios, 1,000, 2,000, 2,500, 3,000, you got to take a little bit of risk to build it, but not too much to be reckless. So yeah, then we're going to go over how and when to scale into a trade, when it makes sense to, when to average down and when not to. And hint, hint, it usually makes sense to not do it, but there are times when it's okay. How and when to hedge your positions. Again, it has to make sense. Okay, guys. Mooney, every time I go heavy, I lose, and they did say, yep. But Mooney, I applaud you. You post your gains and your losses. You are staying humble. And I think it's kind of keep you in check in the long run. So I can appreciate that, Mooney, because a lot of people just, gains tab is always active. Port tab, portfolio help, is pretty quiet because most of you that do take some big losses or huge losses week after week, month after month, you're probably too embarrassed. And so, there's a reason for that. If you're embarrassed, you need to figure out what you're doing wrong. All right, guys, let's dive into this. Position sizing. Looking for some group participation, type it in the chat, whatever you want to do. This is going to vary a little bit, like I said. I'm not going to say any answer is a wrong answer, right answer, because there are some wrong answers. But let's say my portfolio is $5,000. And a hint, scalping is the most risky. Day trades a little bit less, and swings with time or things that maybe you buy time that are still day trades are a little bit less risky. So, what percent do you guys think is a good size? So total position size, when I say that, means if I have $5,000, how much am I putting into this trade? So if River's like, hey man, I like what's SPY trading at 560 something? Yeah. So River's like, I like 564 calls. What is a good position size you guys like for scalps? Ooh, you guys are risky, risky, risky. I'm gonna give the winner to Killer and DeWald. For me, you guys, scalps 1 to 5%. That's for me. Okay. Because scalps, you are wanting to be right. And for anybody who doesn't know, a scalp is not buy at the open and you hold 3 hours. That is a day trade. A scalp is buying when a candle closes or within a 5 minute candle, something like that. And you're scalping to the next top or bottom. If you're in puts, you're scalping to the next bottom of the candle, or pushed up and you're scalping down to an EMA touch, stuff like that. A scalp is meant to be, minutes, a few minutes, like usually within a 5 or 10 minute candle. And so that is risky. When you take a scalp, you're saying, if I want 564 calls and we're at 563.60 and you want a 40 cent run on spot, it's like you're wanting that right away. So this is risky. Scalps are risky and you cannot go heavy because you guys know when it's FOMC days, stuff like that, and we get chopped around or stuff like that, there's a little bit of not heavy chop today, but there was a little bit of price action that I was kind of looking at SPY and I was going, that's probably going to bother some people in this little zone here. And so scalps, you got to really be right, kind of quick, kind of right away. And so for me, scalps, I size down because you try calls here on this EMA hold or bounce, whatever you want to call it. You want to hold this zone here. And you're in a 10% position size and you take calls here and you go, okay, mental stop. But you don't, and you get this kill candle here. I can tell you this is probably way more than 30% loss. Okay. And so now 10% position size, you take more than 30% loss. Do the quick math. You're down 3% of your portfolio on a 5 minute candle here, you guys. Okay. So for me on scalps, I size down because again, you got to be right like pretty much instantly. Okay. Let's build on this. You probably know where I'm going. Day trades. What is my preferred? Anybody in the chat? Day trades. So meaning, hey, I'm buying 30 minutes after the open. I have the intention of selling into profits or into day, whichever comes first, or a stop out. Kermit says 20%. Again, man, maybe I'm just too much of a wimp. 10%. 1 to 10%. And I put the 1% in there because, again, you guys, when you have, say I have a $100,000 portfolio, okay, position sizing does still matter, but you can take such a small risk now that your portfolio is so big. So 1% of 100K is $1,000, right? Is my math right? $1,000. So you can take $1,000 entry, which is a lot of money, and you gain 30% on that. Like you're stacking a couple $100 on every single trade. And so I put that 1% there is because when you grow your portfolio really, really big, you can reduce risk more and more and more, but your dollar amount you gain on that profit is still huge. Like when you start stacking $300, $400, $500 days, like think about that. $500 a day over a week, over 20 trading days in a month. That is big money, you guys. That's a lot of money. And so when you grow that port, you can take less and less risk because on your overall portfolio because you have the ability to do that. But I get it. If you guys are playing $500, 600, 800, that's tough. 1K says, okay, 1%. It's like, yeah, that's not that fun. 1% of $500 port, I get it. That's tough. You're going to take some risk. And so that's why for me, I tend to stick with my bread and butter is kind of 5 to 10%. If I'm green on the week, we're Tuesday, say I hit 1 or 2 trades yesterday, say I hit a winner today, I'm sticking 10% position size. If I take a loss yesterday, Monday, actually real life, I took a winner yesterday. I took a loser today. So I'm right on the day today, but I'm green on the week. So now for me, my game plan is size down in that kind of that 5%, 6% position size until I get back to my, my high point of the portfolio, so to speak, on the week. So Monday was my high point. I took a dip today on the overall portfolio. And so now I size down. I don't double down tomorrow. I don't go 20% trying to make back that loss today. I size down and I slowly chip away at that loss. Okay. Let's see, next week expiration, whole day, 20%. Nice. All right, swing trades, you guys. Swing trades. Don't be quick to answer this. Think about it. You want to enter a swing trade. You're not sure when you're going to be right. Or you're buying swings with time, or you're buying an entry with time. Okay. What is a good position size and why? Or I guess after I show you the slide, we're gonna go over why. Swing one contract. Okay, Mooney, one contract. What if the contract is $15 and your portfolio is $5,000? Can you take a little more risk, Mooney? The answer is yes. So I want to go over this a little bit. Your position sizing always is based on your portfolio, not number of contracts. I mean, you don't say I'm getting 5 contracts, 100 contracts of this because that's what I did last time. It's always based on that. Elvis says 15, 20%. Guys, for me, swings with time, 3 to 5%. Okay. It doesn't sound like a lot. Doesn't sound like very many contracts. Okay. But why does this vary? Think about, okay, we get an alert for AMD calls. Why do I not want to go 20%? So AMD calls are alerted at the end of the day. We're not swinging AMD because they're in profits. We're taking AMD at the end of the day because we think it's going to go up. What happens if I'm in 20% of my position and AMD opens 1.5% down, or opens down tomorrow? Market opens, shit, we're down 20, 25% of the port, whatever it is. AMD gaps down. So now you took a 20% position size. You're starting the day off with a loss instantly. It's below your stop. Now you're freaking out because, it opened below your stop and now your position size is too heavy. So immediately it ruins your day. And now you're in heavier than you wanted to be, than you should be. Okay. So this is why this varies on riskiest to low risk. So if you take AMD calls and say I don't think AMD trended today. I didn't look at it, but say AMD just trends all day today. Even though it was meant as a day trade, you can still buy next week expiration 2 weeks out because you're saying, hey, I'm taking a day trade here at this big, I think 180 was a big level. I'm going to take the 181 calls. We look like we're trending up. I don't want to be right instantly, and I don't want to get cooked on the dips, but I want to hold it throughout the day. It looks like we're going to trend. You can still buy day trades with time, you guys. That is your safety net. I'm going to go over that a little bit later. That's your safety net. Okay. But for me, swings with time, I don't know if I'm right. Like tomorrow morning, if we take AMD calls, I don't know if I'm right. And so I will always take profit, even if it's a smaller position size. If I enter 3%, $150, and we open up and I'm up 35%. I treat it as a day trade, as in maybe I bought calls, at open tomorrow and boom, 35% gains. I'm taking that. Okay. And so I always scale in small because another thing, let me see. I don't want to spend too much time because I don't have an exact, actually, I think I do. All right. Disney. Look at Disney on the 30-minute chart here, guys. So if you buy Disney, let's look at this consolidation zone here. 30-minute chart. So last week, July 9th, whatever day that falls on, let's just say last Wednesday. You're like, oh, the breakout's coming. I'm going to take calls. Oh, stop me out. We push up. Oh, the breakout's coming. Take calls. Maybe take profit, maybe don't. Back red. Oh, we push up. The breakout's coming. Nope. Sell down. Stop out again. Okay. If you're buying weeklies, you either might catch a break here, might catch a break here, or maybe you missed it, or maybe you overslept, whatever it is. Maybe you overslept and now they're red again. So this is an example here. Consolidation is another reason why you can buy swings with time. It has to make sense on your portfolio. So you can buy Disney. So this is July 9th. You can buy July 28th, August 2nd calls, whatever it is, stuff like that. Stuff like this, you guys, I don't know when Disney's going to break out. Maybe this breakout happens the next day. Awesome. Cool. We take profit. Maybe you get caught in this. But if you have 6 weeks time, you guys, and you're buying Down here, you can go, okay, maybe I'll take some profit. Okay, I'm down to break even. Maybe I'm a little bit red. We sold up again. Maybe I'm break even. We push up. Because you have time, you're not taking big theta hits, contract decay on short expirations. That's why you buy time, you guys. That is your insurance. That is your buffer. That's your safety blanket. You said, hey, Disney's consolidating. It hasn't broken down, but it hasn't broken out either. But you can say, okay, massively oversold. Maybe it has a catalyst coming, and boom, you catch the breakout, and you're patient. You can hold through 4 days of chop, but you cannot buy Disney. If this was yesterday, you cannot buy a weekly call on Disney, $3 out of the money and get caught in this chop. Because if you buy here and you hold, you don't take profit, and we come back down here, you are still not at break even because you took a theta hit decay on your contract. Does that make sense, everybody? So this is why it varies. Let's say K3, let's say we're in a day trade. I'm already in a full position. Can I average in for you? What would you do on that trade? So let's see, say a minute. I'm gonna read it again. Say we're in a day trade. So K3, are you assuming you're 10% in and it goes red, or what do you mean, K3? Type in the chat or unmute your mic if you want to. Let's go over that. Because I just want to make sure I answer it for you. I'll wait for him to answer, he or she. Clandestine, what do you consider as time? Good question. For me, if I'm swinging, so this is Tuesday, if I swing with time, I'm getting 2 weeks or more, ideally. So next week expiration or more, because that is your safety net. Especially on the cheaper names I trade, I can buy 2, 3, 4 weeks of time, and I can still get under, a $200 entry per contract. You're not buying 2, 3 weeks of time on a reasonable strike on Tesla and getting it for $200. Okay, so it has to make sense. I have everything from K3. I'll wait, see if he chimes in. With swings, let's see. With swings with time, what kind of stop loss would you set up? Good question. I'm going to get to that. I want to save Killer Skull. I'm going to come back in a few. When we go over hedging, I'm going to have a really good example for you guys. But to boil it down, it comes down to large time frame charting. I took a C, Citibank with Tilio. He's been talking about it in his newsletters. He's been talking about trade floor. He likes banks, stuff like that. So on, say it's Tuesday, on Friday, I knew this level here based on a large time frame. To kind of answer your question, Killer Skull, I knew this 63. No, I lied. 64. I don't have a line here. I must have it on my other charting. Let me throw it here. This 64 across multiple large time frames, Killer Skull, I knew this was a huge level. I knew the bounce and reaction here. So I literally took one November expiration call with Tilio. I took a 65 call on C. Again, it expired November. I took this because I wasn't sure when this breakout was going to happen. He was in long term too, but I was kind of watching this kind of movement, this price action here. And I took profit on it today in this zone. Obviously, it went a little bit more. Somewhere in here, because I had an alert set here. It fired off, so the alert doesn't sit here. But I took profit. I took 58% profit. Not bragging, just pointing it out. I took 58% profit on one contract that expires in November. When does that expire? 4 months. So I wasn't sure, I was following Tilio because he's a smart guy and I trusted this level. I like the price action. I bought November expiration because I didn't know when this breakout was going to happen. We pushed up here, didn't take profit, sold down, or, aftermarket. The next day, yesterday, failed, sold down. I was like 20 something percent profit. I literally went back to break even, but I had so much time and the level again did not break. So answer your question, Killer. That is what you trust your levels on long swings. Even generally speaking, you don't trade off percents because that'll mess up your head. It'll mess up your trade. You always trade off key levels. I was not worried. Again, November expiration, It sold down. We bounced up hard. If you look at a 30-minute candle like this, that reaction there, you should say, you know what? Buyers are parked at 64. I'm holding with confidence. Pushed up over the 9 moving average, and then get this big breakout today. Livens, the further contract, the less risky. Yes, as long as, I mean, generally speaking, the more time you buy, yes, that is your safety net, but you're going to pay more, obviously, because you're paying for that insurance. Okay. And again, contract selection matters. Okay. If I couldn't afford, the contract was, I think it was $333 for this contract. Okay. I didn't want to have a bunch of money tied up, so I didn't buy a bunch of them because I don't want to have a bunch of money tied up. Because remember, I want to be able to day trade and scalp if I want to on that portfolio. So I took one, so I had $333 tied up. Okay. But I picked a strike that made sense. If I couldn't buy a 65 strike in November because I couldn't afford it, I'm not going to buy a 71 strike. Like, that just doesn't make sense because we haven't traded up here. I'd have to go back and look. I don't think we've traded up at 71 in literally 2 or 3 years. Why would I buy a 71 strike? You don't buy an out of the money strike because it's cheap. That's a huge, huge mistake new traders do. They see, I don't want to talk about it too much, but there's an example. But you buy an out of the money strike just because it's cheap. Well, it's cheap for a reason, you guys. If you don't know about a thing called Delta, look on a contract on Delta, and you generally speaking, you want a delta of 0.3 or higher. Delta tells you for every $1 the stock moves, for every $1 the stock moves, that delta number will tell you how much you'll make. Okay. And a delta also, generally speaking, is your percent probability it's going to close in the money. Percent probability closing the money. So if you have a delta 3, so 0.3, sorry, 0.3, that is a 30% chance that at expiration that'll expire in the money. And you don't hold for that just going, hey, I got a 30% chance I'm holding. It's like you need to sell. So I sold here, obviously, again. Yeah, it's November expiration. I sold here because it's our first time back here since the big rejection here last week. So I expect a little bit of pushback. Again, obviously we broke over it. Hopefully we stay over it, but still. All right. Let's see. Yep, Norvin, I will get to some charting stuff in a minute. Let's see, chop back and forth a bit. Yep, means chop back and forth. Sounds good. Okay, let's move on, you guys. Yes, once your port grows, you can take even less risk. We went over that. All right, let's look at an example. See who's paying attention. I gave a few hints already, but don't be quick to rush. So I'm a new trader. I'm always going to buy 5 contracts because I want to scale out. I like leaving runners. It's cool. I want to post a gains tab. I want a 150%, runner. Okay. My port is $5,000. There's a trade floor alert. We're not trade floor, a trade tab alert. Delta Airlines call is 45 call. They're $1 or meaning $100. I'm taking 5 of those 45 call. So think about position sizing, think about the strike. Delta Airlines is at 44.70, the time of the alert. Makes sense, right? Okay. Trade 2. Doesn't mean the same day, just another example. Tesla. Somebody alerts Tesla in the tab. Not on trade floor, but I mean in the analysts. They say, hey, Tesla 260 call at 425, $425. Again, I'm taking 5 of those. I like to scale. I want runners. So I'm taking 5. So he alerted the 260 call. I'm going to take the 267.5 contracts. Those are 220 a piece. Tesla's currently at 257.60. Tell me in the chat or mute your mic. Whoever's paying attention and not scrolling Instagram right now. Whoever's paying attention. Where are my mistakes? First of all, Delta Airlines, does that look good? Alert 1. Does Delta Airlines look good? I see some responses. Hopefully those are for Tesla. Love it. Love it. Killer says no. SK says too far the money. Yep. Awesome. You guys are doing good. Oh, sorry about this, you guys. I think Bitcoin is ripping right now. Sorry. Hopefully you guys cannot hear that. If you can hear that, let me know. Hold on. Give me 1 second. I got to turn alerts off because that's driving crazy. Sorry about that, guys. Give me 1 second here. Oh yeah, Bitcoin's on the move. But let's not get distracted. We got class today. All right. All right. I lost my train of thought. Delta Airlines is fine. $10 out of the money, Rev says. Too heavy in Tesla, too far out of the money. Great job, you guys, right? I tried to trick you a little bit, but you guys are smart. So, and no, Rev, I didn't take this. This was hypothetical just for learning purposes. All right. So losses happen. This is not an actual alert. This is just hypothetical. So, let's say, the analyst alerted and, this was a loss that we took today, okay? So this is why position size matters, you guys. Pay attention. So you took 5 contracts at $1 a piece. Total entry. So again, when I say position size, your total entry. So this is where the number of contracts you buy, I don't care what you like to buy because you want runners. If you cannot afford to buy multiple, you don't do that. If you can't afford to buy the strike alerted, skip the trade. I know Evo was in some was it AVGO or something that was like swings, and they were like 1,100 a piece or 800 a piece? I don't know, something crazy. So if you can't buy 5 of those, but you can buy 1 because it meets your 10%, you want to take the trade, do that. But you do not buy 5 of those because she alerts it because you just like to take 5. You don't do that. Your number of contracts is based on your position size, okay? So Delta Airlines, again, 45 calls alerted. I said, cool. I got 5 on $500, 10% port size, position size, sorry, 10% of the port. Dang it, we took a 30% loss, all right? So now 3% red in the port. That's not fun. Yep, we took it. We took this at the beginning of the day. It's not fun. We're red on the day, but we're only 3% red. We're down $150. Okay. Say you skip this trade, or say you took this trade. And again, your mindset is, I want to take multiple contracts because I want to trim. Took 5 contracts at 220. You didn't even take the correct strike price. So now you're far out of the money. You're $10 out of the money, which means your delta's bad, which means even if Tesla moves up a little bit and everyone is cheering on those 260 calls, you're making less because you're too far out of the money. Okay. And you are in 22% of your portfolio size on this one trade. So hypothetically, these are 2 separate trades. Again, 30% loss on the trade. No one's perfect. You just took a 6.5% loss on your portfolio. So you guys say, oh, I want 1 to 3% a day, 1 to 3% a day. Okay, let's say 1% a day. You just wiped out 6.5 days of gains on your port in one trade because you went heavy. Okay. This sucks. We've all done it. I've done it. I haven't done it recently, but you guys cannot skip the steps. You guys, I have a calculator open and I go, okay, position size, portfolio's $12,000. I see this alert come through and I'm going, okay, 12,000, obviously that's easy math, but 12,000, no, it would be 12,000 in your portfolio, is 10%. So 1,200, easy math, contracts are $100. I can buy 12 of those. I literally have a calculator open in my portfolio. I divide it by 10 and I go, okay, there's an alert here. How many can I buy? You guys literally have to do this every single time. You cannot skip steps, because when those losses happen and they stack up back to back, you take 2 losing alerts or you take your own trade, this starts to hurt very, very quickly. K3, how much position size if I'm trading SPX? Brother or sister, if I'm being honest, if it's your first trade of the day, that needs to be a very, very, very small risk. Because you guys know, when you trade SPX, you get in at $30, it's up to 80. What do? You take a screenshot and you go, sweet. And then you go back to your phone and you go, shit, I'm back down to 40. It was at 85. Because I know what happens. You take the screenshots for gains tab and you don't secure the gains. And I know that because I know the screenshot was when the position is still open versus when sold. The best thing you do, take the screenshot when you sell. You can go to your past orders, you guys. And yeah, it's not going to show the percent gain. It doesn't look sexy. It'll show 30 you bought, 80 you sold. That's fine. We can figure the math out. Do not take a screenshot when it's up 110% and you haven't sold yet. Okay. To answer your question, the only time I trade SPX in a day, K3, so say I'm up 500 bucks on the day, I'll risk probably 50 to 80 bucks. So let's just say contracts at the money are about 30 cents or $30. I'll get 3 of them. And I'm willing, I'm not saying it's a good idea, but I'm willing. And if they go against me, it's 100% loss. Okay, I'm up 500 on the day. I said I risk 60 bucks. I'm leaving on the day $460 profit. Yeah, I took a loss, but there's no way that I'm up 500 bucks on the day. I go heavy on SPX because the last flips alert yesterday was SPX $30 to 1,000. So I go heavy today because he's going to hit today. There's no way in hell that I trade hard all day, whether I take 1 or 3 trades, I'm up 500 bucks. And there's no way I let all that I in green 50 bucks, or I in red 50, or in red 200 bucks. There's no way. So for me, SPX, I look the P&L towards the end of the day, and I make a decision, and I make a decision based off the chart too. Like there's days where we're chopping, we're not getting much action. There's a lot of wicks back and forth. I'll skip SPX. That's fine. You know, it's a rush, you guys. Yeah, it's fun, but it is risky shit. It is literally the riskiest thing you can do. It's if you think SPY 0DTs are risky, try trading SPX at the end of the day. You can even paper trade on Webull. Buy it for 30 bucks and watch in a flash how it zaps your profits away. So it needs to make sense, you guys. You guys, we cannot be gamblers. We have to be traders if you want to survive this market. Because again, the market does not care about past performance. You know what your goals are. You got to pay off a wedding. You got to pay off your car. The market does not care, you guys. You have to survive this market. Position sizing, does this make sense, you guys? I'm not sure if I got ahead of myself. Let me check the next thing. Yeah. Risk management is #1 priority. Nobody has a 100% win rate, you guys. Even Flips takes losses, you guys. And he's transparent. He live trades with us every single day. And he'll put his tab, oh, red day, guys. He doesn't hide it. He takes trade. He leaves his mic on and lets us hear the buys and sells. Like he is super transparent. He has losses, you guys. I don't know if he took losses today, but you know, he has losses. So you guys, you know, the reward is getting, you know, profits on a good setup. Okay. But again, the market does not owe you anything. You have to assume, you know, you want the trade to go in your way, but you have to assume, okay, if it doesn't, can I handle this loss mentally? Can my portfolio handle this loss? iPhone, yep. Paper trade. Well, at least it's paper trade. Yep. Nick, I love it. Nick says, I can't afford Tesla. I do TSLL. I love that, man. That is so smart. TSLL is leverage shares, you guys. I think it is 2x, 2 or 3x. So if Tesla has a 5% day, TSLL is a 10% day. So TSLL is trading at 15 bucks, you guys. 15 bucks. And it literally, let me do, just to show you, prove it, whatever. Let me unlink this really quick for maybe newbies. So TSLL is up here, and Tesla is, did it change? Nope, wrong link. That's right. Tesla. And I need to go to the 15-minute to show you guys. So, does that look similar? The answer is yes. So TSLL is a leverage position. There's several leverage positions you can trade. And If you think, this is off on a tangent, I don't spend too much time. You can write this down, you guys. SOXL, SOXL, S is in sock. If you think chips are hot or weak, NVIDIA, AMD, whatever it is, you can trade SOXL. If you think that sector is hot, it's going to push, you can trade SOXL the same way. But anyway, TSLL. So we push up, we buy back here, and flips alerts 252. I don't know if there's a 252 strike. That's just hypothetical. He says 252 calls, you guys. Let's try and ride these in a day. And like Nick said, maybe you can't afford it. That's fine. What do you do when you see a Tesla alert? Go to TSLL. And so look at this level here. You can see my crosshairs are synced up. It is the same spot, you guys. Break over VWAP, retest, TSL calls. You can ride with the OT group or the voice chat. Same thing. Tesla sells down a little bit yesterday. Same thing, you guys. Nick, great job, man. I'm glad you pointed that out. Also, if you guys are having trouble finding some slow moving tickers, you guys know my lectures and how I trade, what I like to trade. You know, there's a lot of stuff moving. I'm going to go over at the end. There's a lot of stuff, but I want to get to hedging and stuff like that. There's a lot of tickers we can trade, you guys. For SPX, iPhone, just trade SPY. Yes, Aaron, SOXL, yes. Sometimes liquidity, open interest is a little bit funky, you guys. So like, look at the open interest and volume and look at the spreads on, because the spreads will be a little bit wide. So if the ask is 30 and the bid is 10, do not market buy at 30, because if you market sell, you instantly lose $20. So do a mid, look what the mid price is. I'll just show you because we're talking about it. So this is a, what, $9 spread right now. Always look at the mid price, you guys, and your buy-ins. What I do a mid +1. And for my sells, I do a mid -1. So I'm saying if I want to get filled on a mid +1, hopefully I get filled at 181. So I just say $4 on a buy-in. You don't want to buy the top. And I sell at 179 ideally. So I save $3, not selling at 173. So the mid price, always pay attention to that, you guys. Elvis, yes, I do look at IWM. IWM is fairly cheap as well. I can't think, someone put in the chat, they know the IWM leverage position. I can't think of what that is. I don't want to spend too much time searching for it. I've traded it. There is a 2x and 3x leverage position as well. But I want to keep rolling, you guys, because I always run long. But yes, TNA and TZA. TNA, I think, is bullish, and TZA, I think, is bearish. So if you are bullish on IWM, you can do TNA calls. If you're bearish on IWM, you can do TNA puts, because I think TZA is not super liquid. So you never want to be in a contract where you cannot sell, because literally there's no one buying it. Nice job, D. You can be overall profitable with a lower win percent only if you have proper risk management, which is position sizing and risk reward. So we talked about position sizing for 40 minutes now tonight. Does anybody not know what risk reward is or what it means or how to describe it? Put it in the chat. It's okay if you do not know. If everybody knows, I will assume we know, and I'll kind of just glance over it. But if anyone needs clarification on what risk reward is, if we say risk reward ratio is 1 to 4, does everybody know what that is? Newbies, I want to help you if not. But I want to get to hedging. Okay. Livin says, talk about it. Risk reward. If I'm risking $10 on a trade, but I think my profit target is $40, that is a 1 to 4 risk reward. I'm risking 1. For every 1 I'm risking, I'm wanting a reward of 4. So 1 to 4 risk reward, 1 to 3, 1 to 5, whatever it is. So if your risk, you guys that have 10% hard stop, 10% hard stop, but you always take 20% profits. That is pretty much a 1-to-1 risk reward, saying I'm risking 10%, but I'm only going to take 10%. You know, you better have a good win rate if you're going to do that, because you're basically just going back. Your portfolio is going to be chopping. Or if you take a lot of losses, your portfolio is just going to trickle down small because you're taking 10% losses on the entry. But you got to have a defined risk reward, and it's got to make sense. And again, you guys, that if you've been to my profit target, stop loss classes, stuff like that, it all comes down to key levels. Okay, you don't, you probably, this is the 9 daily moving average, daily, not an intraday, daily. You probably don't want to take calls when Tesla pushes down to the 9. You probably don't want to take calls right there. Maybe you can take a scalp. Actually, not to brag, I called this one out today on trade floor. I said, QQQ, I said, hey, somewhere around here, this is a 15-minute time frame. I said, hey, if we push back up into the daily 9 moving average, daily 9, this purple line, we got the hourly overhead. I say, this is a low risk scalp, and I drew the shaded area for myself. And I took these puts today, hit huge. This was like 138% down here. I took some puts today because I had a trade plan. I knew the risk was small. I drew it out. I defined it. Okay, I drew it out. We pushed up into this zone here. I took some puts up here, the 495s, I think. I don't know. I took this here because I had a trade plan. I knew the risk was small on a push up here to this zone here. Sold down into this trend, what would be trend, sold, moved stops, sold down, and sold the runner. Didn't quite get it. And I put in trade floor. I said 493.10 is final target. We didn't quite get there, but whatever. So again, let's see. What if it does not hit target? Pullback hard. How do you set up an exit? Swing, good question. I think I know how you're. So, you can. How do I want to word this? You can get into puts here. This is hypothetical on Delta Airlines, and you can say, hey, up here, this is hypothetical. I have no idea what this is. You can say, hey, I'm just trying to do this on the fly for you guys. You can say over this zone here is 10%. Let's say this is 12% up here. So I want a 10% loss. You buy here, and maybe I'm not gonna say you're not good charting. Maybe you're not good charting, and 30%. So that would be your 1 to 3 risk reward. So maybe you don't hit it here. For me, I try to have my first profit / price target at 20%. I try to. It doesn't always work that way, but I always secure most at my first profit target. Then I leave runners. I don't. If 30% gains is down here, there's no way that I'm going to see a sell candle into this low here when we bought back up the previous day. There's no way I'm not going to take profits here. And so again, it comes down to charting. Who asked that swing? It comes down to charting the levels. It's not perfect, and sometimes if it's a faster moving trade, you're like, well, shit. We sold down this level here. I took gains here. Yeah, it's 22%. It's not 30, what I thought it would be. There's no way I'm going to hold just because I think I need to get a 1 to 3 risk reward. Like, it needs to be in your trade plan, but it doesn't have to be perfect. You always want to trade levels, and within those levels, you can use. You guys have seen me do it. You can use the contract chart, options chart. You can use that to figure out. Okay, hey. 712, the 44 puts. Just the 12. Yeah. So you can use the options chart to kind of help you along and say, hey, if we sell down into this zone yesterday, what was that value yesterday, the options contract? If it's short dated, it's going to be really hard to estimate, but that is how you can do that. This is the importance of drawing support and resistance. You got to do your homework every single night. Yep. Nick, every single night or pre-market. If you guys know my trade plan, what I talk about, every day pre-market, I set top and bottom alerts. Like, we're coming back to this zone here. We sold down, I think, on earnings from Delta Airlines. You're damn right. I'm going to set an alert here probably tomorrow, and alert down here. Because you know what? Yeah, we pushed up huge, but you know what? I'm a day trader. I will take puts here. I don't care. I'm not an investor on Delta Airlines. I'll take puts and day trade if I'm able to, and the market shows weakness. swing. How do you exit last runner when huge volume and trend is with you? Do you still exit your profit target? I think I know what you're asking. I just ride it, man. If you get lucky and you can catch, this is a better example. I'm gonna go over this today if we have time at the end. Like if you catch this open on Delta Airlines today, this was today, you guys. This is a 15-minute time frame. If you catch a trend like this that is through half the day, immediately my mindset is make this 9 EMAs the 20. I literally say make it stop me out. Like market, I dare you to break under. That is my stop. Like I set alerts if we push up to this previous zone here, and I sold 5 here, I sold 5 more here, I'm down to 2. I literally say I'm riding this trend all day. I let this EMA stop me out. This is the type of trend, you guys, we all dream of, that we all want, where we catch those runners. Like this contract did huge today. If anybody, I didn't take this, anybody took this, but to answer your question, you trim heavy at a profit target, hopefully 20, 25, 30% for me. And then your stress is lowered, swing, because say I was in 10 contracts of this and this is my profit target and I nailed it. I just sold 10 and 12. I'm chilling because I'm up whatever percent on these last two. There is no stress. Bare minimum, you set, I mean, don't be stupid, just set stops to break even. At bare minimum, set stops down here. But my mindset is, hey, let this trend stop me out. Like this is what we work for every single day. We want to catch a trend. We don't know the trend's going to happen until the end of the day. You go, oh shit, it's a trend. Okay. Matt Mooney, Monday, Tuesday. So yesterday and today, I'm buying weeklies. So I'm buying Friday expiration for a day trade. Now we're going into Wednesday, Thursday, Friday. Again, I took a loss today. I'm looking at contracts next week. I'm looking to reduce risk 2 ways, like we talked about. My position size tomorrow's gonna be sized down, and I'm looking at next week contracts. Because again, you guys, Delta Airlines, I can buy a next week contract at the money for $74, you guys. Or again, Delta Airlines looks weak tomorrow. We're breaking this 45.56. 45.56. I'm taking the 45.50 calls next week, you guys. Next week, I can buy for $68. That's nothing. $68. That's cheap. You guys are in a small portfolio. That's where it's at, you guys. These moves, and oh man. You bought the open today. You guys think these slow movers don't pay? I say it every week. You're probably tired of hearing about it. You bought this 15-minute candle. You rode the churn all day because you're amazing. 260% on that contract, you guys. 260%. And at the money call. That's where it's at. But we got more to talk about. Hedging. People had questions. For you guys that don't know, hedging, the best way to understand and think about a hedge is your protection or is your insurance if something were to go against you. Okay. So again, say, I don't know if AMD calls were alerted today. Say AMD calls were alerted, EVA alerts, AMD 180 calls for November. Hypothetical, I have no idea. You know, AMD is kind of going sideways. You're in small, but AMD is showing weakness the last 2 days. So do you ride it out or do you hedge? So a hedge is when you have calls that are long dated or puts that are long dated, you buy the opposite, ideally short dated, to protect the move against you of your main position. This doesn't prevent all the negative from happening. So if AMD keeps going down, you have to think, okay, you have to treat a hedge as just whatever you're focused on, whether it's AMD, Meta, Apple. It's not hedging. I mean, it can be, but it's not hedging against your overall portfolio. If you're in Apple calls, your hedge ideally is Apple puts. Okay, so if Apple's weak today and you're in calls and you say, I'm going to take SPY calls as a hedge, okay, SPY is weak too, or hypothetically, that's not how you hedge. You hedge ideally the same thing because, however, if a negative event does happen and you're properly hedged, it'll lessen the impact. It is reduced. Okay. iPhone, yeah. The same thing. If you have, that's a deeper dive. selling calls on something or buying puts against something iPhone. But yeah, if you have 100 shares of something or a lot of shares or something in your long term, you can hedge puts against it. Okay, so I'm going to go into hedging, you guys. I have what I think is a really good example. Oh, when is a good time to hedge? Think about the things we talked about: expiration date, scalp swings. When is it good to hedge and when is it not? Use your brains, you guys. Tell me in the chat, because this is important. This is important. This is important. I'm going to take a drink of water. Someone tell me in the chat, when is a good time to hedge and maybe when not? Maybe 1 or 2 examples is all we need. When theta is high, you're down, DeWalt. Maybe. When theta is high, so that would mean something is short dated. iPhone, I like that. When there's a lot coming up or an event coming up, okay, I can respect that. Swing, have you on a trade to protect it? I like it. Okay. Do we hedge scalps? If River says a 594 scalp call, do we hedge scalps? Marina says news that can affect it. I like that as well. Yep, hedging is a waste when you're close to. Do we scalp hedges, you guys? If River says, "Hey, I'm in 494 calls. I'm looking for 493.80." No, exactly. You guys, if River, because we all love River and River's a scalper. Let's go the 5-minute. If River alerts calls here, he is wanting to be right, probably within that 5-minute candle on VWAP. You don't go, oh, he alerted calls here, and now it's going down. I'm gonna take SPY puts because that's my hedge.
Sure. I gotta do another one anyway, so I'll flip them.
Gotta meet you, brother. You do not scalp because you're wrong on a call. If you want calls here, you don't hedge. You don't leave this position open and take. You don't take one SPY call here and one put here to hedge. You don't hedge scalps, you guys. Scalps, you are right or you're wrong again within a candle, probably within a few minutes. Okay, you scalp when you have time and when it makes sense. Like someone says, when your position sizing makes sense. Okay, you guys. Here's an example that I think is really good. Starbucks. Rev, you still in here? You are. I don't know if you're listening or not. Starbucks. This is the 4-hour chart here, you guys. This thick line, pay attention to this. I'm going to zoom in later. This is an example of hedging. Okay, this is hypothetical. Obviously after the fact, we can look at this, but where this green arrow is here is basically the 79 level. Okay, and this was June 27th, so last month. This is a 4-hour time frame. We push up, big volume on a push up. We sell down. You guys know I talk about pivots. I talk about price action where I like to see movements. Okay, 4 hours, we trickle down. We bounce. That tells me buyers are here. Morning, we sell down. This is a 4-hour candle, you guys. Big buyers again. Breakout failed. Big buyers again. Trickle down. Trickle down. Buyers again. Sell down. Buyer, you get the point. Buyers again. Sell down. We hold. We hold. We hold. I go, okay. Remember that Disney consolidation? This is the same thesis, you guys, and how you ideally would or should hedge. Okay. Starbucks. Again, consolidation. I'm not sure when Starbucks is going to break out, but I think it's going to break out because this is a big support here. Again, we're going to zoom in. Just pay attention to this level here at 79. Okay. So this is June 27th. Hypothetically, this is today. Hypothetically, we enter an 80 call. Why am I entering an 80 call? It is close to at the money, so it makes sense. Okay. I'm not buying an 83 call way up here. Okay. Starbucks. These moves look big, but they're not big, you guys. These candles, this is $1. This candle is a $1 candle. It's not that big. Okay. So I'm buying time. At the time, it's June 27th. I'm buying an 80 call for August 1st. It's $310. I'm buying one. Okay. My port size is 10K. I'm okay. I'm buying one because I don't know when it's going to go up, but I think it's going to go up. Okay. The next day, shit. We bought here, we gapped down. I'm blocking this off here for now because I want you guys to focus on this time frame here. Okay, I'm going to zoom in really quick, or on the next slide is what I mean. So we bought here at close, we come down. But again, we're not worried. We shouldn't be worried because we have levels charted out here. That looks like a big drop. It's only a $1 drop. We have 6-7 weeks of time. Okay, now I'm going to zoom in. How do we hedge hypothetically? Okay, so we bought calls here at the close. We said, hey, this is the breakout. We bought for 310 bucks. And we sell down here. If you guys know my trades, look at this shaded area. This is the 15-minute time frame. Break and retest are my favorite. This is my bread and butter trading every single day. So we sell down here, we push up. Okay, now I'm looking at this trade going, okay, we sold down to the next big support, but I know it's a big support. We push up, but where are we rejecting and why? Why are we rejecting here? Look left. You guys, you always hear me say trade floor, and in lectures, look left. We're rejecting last week's lows. Hypothetically, this was today. We're rejecting last week's lows. Okay, I have time on my contract, but we just broke a big support. Okay, how do I manage this? Do I take the loss or do I hedge it? Okay, I'm choosing to hedge it because I feel like I'm experienced. I know how Starbucks moves. And for me, this is a perfect push up, reject, push up, or rejecting. I'm going to take weekly puts. Okay, so follow with me here, guys. I'll try and point this out. So I'm taking weekly puts. I'm going to take, so we're trading at 78.4. I'm taking the 78 puts weekly. So hypothetically, a weekly put. Okay. I'm buying it for 123 bucks. I buy here. So this candle here, this sell down here is when puts gain value. This bounce right here is this green arrow, is this green arrow here. So we sell down, your contract gains value, we push up. Okay. So I bought that contract hypothetically right here, and I sold down here for 25% gain or $31. Okay. So I'm down on this long call swing, and now I have to make a decision based on this price action today. I made the decision to sell here. Yes, it's at support, but it broke my main support, and now it's down to support level 2, and it just broke that. Okay. So I made $31 on this trade. Here's the hedge. So this level here, this thick level here, and this level here, that is this level here on the long swing call. Okay, so that long swing went from 310 to 276, so 34 bucks, 11%. So again, you guys see how buying time is manageable. You buy 6 weeks of time, it sells down. If I don't hedge, I'm only taking 11% loss on one contract, you guys. 11%. 11% loss. That's nothing. That is totally manageable overall. Okay? Totally manageable. So again, this is the next day. It sells down. $34 loss, hypothetically, if you do not hedge. Okay? Yep, Nick says I knew when you knew when to get a put. This is because again, I've had time in the market, and I want to say this kindly, but when I have a position that goes against me, I'm not numb. I act upon it. Okay, this is real life money on the line again. The market does not care, you guys, that you wanted Starbucks to go up. The market does not care. You swung, it sold down. I have this level here. I already have a plan of action. Okay, I'm not freaking out going, oh, average down, average down, average down. We push up, shit, my average down. Now it's bad. Okay, I have this trade plan already marked out, you guys. I have a trade plan. Okay, this hedge, I didn't really take this hypothetical. This hedge just got me 31 bucks. Okay, the hedge in action. So we took a $34 loss. I took a put hedge, 31 bucks. So again, not total profit loss on the port, but total profit loss on this trade. Okay, $3. That's nothing. $3 on a $10,000 port. That's nothing. That's a McFlurry. That's a Starbucks drink, whatever that is. Or without a hedge, $34. So it's manageable. Okay. And there's a reason we're talking about this, because this is people. I don't know specifically. I mean, I do know a few people. I'm not going to call you out, but there's people hit the DMs. I got time. I'm holding. I'm going to average down because I got time on it. Okay. Starbucks. This is real life. This is what happened. This is actually yesterday. No, this is Monday price action down here. Okay. We entered here. Oh, big support. I'm going to take an average. Now I'm in 3 contracts. I start with 1. Oh man, sell down. All right, all right, it's all right, it's all right. This is a weekly support. This is a big spot. It's going to bounce. It's got to bounce. Market doesn't care. Buy 2 more contracts. Now you're in 5. Now you're in 5 contracts. Calls. No hedge. You're over leveraged and you're down big. Keep holding, keep holding. You're numb. Now you're running out of buying power at this point because Starbucks just keeps going down. Keeps going down. All right. Weekly support. One more average. One more average. Now I'm in all these contracts. It's got to bounce. Again, the market doesn't care, you guys. Follow the momentum. Follow the wave. Follow the tide of the ocean. That is the market. Follow big money, guys. We do not make enough money, even in OT as a whole. If we said everybody buy 100 shares of Starbucks right now, let's pump this thing, guys. We wouldn't move the needle. Everybody in OT, we wouldn't move the needle. Follow the momentum, you guys. Know when to stop out on a trade. This is too many people in trades, or they've seen an alert from an analyst and he doesn't give a stop loss in the trade plan or doesn't give a stop loss whatsoever. And you just hold and you hold and you hold and you hold and you hold. Okay. Swing. When did you enter a hedge on Starbucks? You need to understand that. Okay. I will go back for you. So large time frame. This is the 4-hour. So we're looking at this. And again, this happened in the past, so I had to block this out on purpose so we'd find this. So hypothetically, June 27th, you took this. Okay. That was this entry here. And I blocked this out so we couldn't see the big sell down. But so we sold down. This is I think the 1-hour chart here. And now this is a 15-minute chart. So again, this thick line was at 79, the big level, 79.16, whatever. We sell down. Again, my trading every single day, if you see what I trade or like to trade, even going back to that QQQ, I didn't mention that QQQ for a reason. QQQ was a breakdown and a retest. A breakdown and a retest of a level. That's why I called that or mentioned that trade plan for puts. So Starbucks, oops, same thing. Breakdown, retest. What are we retesting? We're retesting last week's lows. Okay. And here's the other thing. You take a short dated put and it stops you out and we push, that short dated put is less value, the contract you bought. So you bought the long call for 310. This value, you bought it at 123. So if you stop out of this, percent-wise and dollar-wise, it's smaller than this long swing. Okay. So maybe hypothetically, we push up, we stop out. You're like, okay, we hold this gray zone here and we push up and we're back to breaking on this trade, but we took a small loss here. Okay. Well, guess what? Back to the original trade plan. We closed above 79. Stick with your trade plan. The hedge didn't work. That's fine. But when I see something like this on a 15-minute, 15 failed to close over, 15, that's an hour of information failed to close over. Like, you guys need to look at longer term time frames and literally think to yourself, okay, it's not just a candle. This is a 15-minute candle. This is a 15. This is a 15. This is like an hour of information, guys, that bulls did not break upside. You need to look at that. Okay. Another hypothetical situation. Wait, is this the right one? Nope. Sorry, I want to keep going. All right. Or there's this trader. I'm just going to write it out. I'm not going to hedge. I'm not going to cut. So you bought here at 310, and now Monday it opened. It's now valued at $96. You're looking at a 69% loss. So does anybody know anything about percents going up and down based on the value? You're down 68%. What does that contract need to move, the value contract, just to get to break even? Look at your contract now needs to move up. Needs to move up 210% to break even. 210% because you're a bonehead, you're biased, you wouldn't cut all the time, June 27th until July 16th. I guess that was today, or when I took the screenshot yesterday. Instead of cutting for a loss, a small loss, remember you guys, even without the hedge, that would have been 11% loss. But now you hold for 3 or 4 weeks, it's down 68%. And you're just sitting here. And you could have traded puts the entire time. You could have stopped out and said, you know what? It's not ready for 79. I'll set an alert. Maybe it does. Maybe it gets back there. But the next day you wake up and go, man, Starbucks is weak again. I'm going to get in some long swing puts. And then you ride this all the way down and you bank huge and you forget about an 11% loss. Okay. You guys have to have a trade plan. You have to keep your mindset. Okay. Same thing here. Now you're $7 out of the money. So we sold down, let's go back to your original trade plan. You said, hey, I think it's going to hit 80. I took the 80 call. Now we're all the way down here. Let's think about this now. All the way down here. Think about this mindset. If you were here and you bought an 80 because it's close to the money, you're all the way down. Let's just call it 74 for round number. Are you going to buy an 80 call now? No, you're not going to buy a $7 out of the money call. Like you didn't buy $7 out of the money call up here. So why the hell are you going to buy it now? So see what I mean? The contract is now $7 out of the money because you didn't cut. Your delta is now 21. Remember, 21% chance of being in the money. You're $7 out of the money, you guys. Down 68%. So like when you trade normally and you have runners and stuff like that, do you ever hold for 2%? Probably not. So it says, why do you think you're going to have the guts to hold this for 210% now if you don't do this on a winning trade? Oh man, I can't hold runners. I can't hold runners. Amazon went to 200%. I sold at 60. Well, if you don't do that on a winner, you're not going to do that on a loser. Okay. So yeah, going back to it, next day could have been a 10% loss with no hedge, just cutting. You buy time for an insurance. So you don't have to be correct right away. You guys stick to larger time frames. That is how you find market moves. Tilly was talking about Citibank to a few people. And obviously when I looked at Citibank, I was like, well, okay, you're smart. I know you know flow. I know you're a good trader. But at the time, we're kind of doing this. And I said, you know what? I don't know. I like his thesis on the breakout. I like that, but I don't know when it's going to break out. So I bought time. And again, there's one contract. Who cares if you got one? Take profits when it hits your profit target. That is your insurance. You don't have to be correct right away. We're running long as usual. I appreciate you guys sticking with me. Any questions? I don't want to do a ton of charting since obviously we're running late. Does anybody have any specific questions on a position they're in that maybe they need help with? Because I also want to go over some really kind of important stuff, RSP, SPY, and Qs. Does anybody have a position that's open that maybe they want some help with? I'll spend a few minutes with them. Or maybe I should go over this first because we're running late, but put in the chat if you do. All right. Clandestine, I'll wait for you to go over it. RSP, you guys, if you're paying attention to Tilio's newsletter, hopefully you are. He's been talking about RSP for a while. What is it? RSP is equal weighted holding of the S&P 500. Okay, what does that mean? Equal weighted holding. So everything that's in the S&P 500 is equally weighted. What does that mean? Okay, normal S&P 500, look at the weights here. The top 10 holdings of normal S&P 500 are 35%. If you chart out these top 10 holdings and they're all bullish, this is 35% weight of the S&P. chances are, and if these are all going up, chances are SPY is going up. Okay. Look at this. This is tech. This is tech heavy. Equal weight RSP. Everybody gets a fair share, piece of the pie. When you cut a pie equally in 8 slices, that's what this is. The pie is not cut evenly here. Why does this matter, you guys? If you're paying attention to his newsletter, you're seeing RSP is making some really strong moves when tech and QQQ are not so much last few days. Qs are kind of having a hard time. That is tech. But if you guys look at RSP, again, RSP, and we look at SPY, I think there's a few days of some really good examples. Yeah, even today. Let me get to the same time frame. I think so. It makes sense. Make sure I'm not the wrong of the day. So look at this, you guys. RSP's on the top, SPY's on the bottom. What's RSP doing all day? Trending up, riding the 15 all day. This is the equal weight of the S&P 500. This is the market rotating right in front of you guys. A little bit out of tech and into small cap, stuff like that. IWM, stuff like that. RSP pushes up, SPY pushes down. You know what this sell down was here? Don't even have to tell you. What was that dip? Look at my crosshairs. They're synced. This dip here on SPY, what caused this drag down on SPY? Look at that. That's tech. That's big tech. That's this dragging down the S&P 500. RSP, you guys, we're witnessing something really kind of nice, really cool for you new traders. It's a market rotation a little bit. I'm not going to say tech is super weak, but tech was weak right here on this moment today. And the rest of the S&P 500 was strong. Okay, so if you're not getting the breakout on SPY that you want, pull up QQQ, pull up XLE, pull up XLF. That is why. All right. Clandestine, I think I'm saying that right. I'm gonna go to Webull because I'm faster and more comfortable with it. Guys, we're running late. If you gotta go, no hard feelings. If you want to stick around and learn some more, hang with me. Let's roll with this. But I'm gonna try and get to a couple of these charting because I think it's only fair. Let me get this pulled up. All right. 726, 225 put. 225 put. Let me make sure I'm reading that right. Apple 225 put, 726. Average 86, and you're sitting at 70. So you bought probably yesterday. 86. He or she bought. So it's the options chart, you guys. When 15. Am I on the right chart? Is that right? Yep. Okay. This is the price action. So this is the 5-minute time frame on the options chart. When Apple goes down, the stock goes down, your value of the option, because you're in a put, goes up. So let's see. 5 buys. Clandestine, be honest, are you in heavy or how's that on your portfolio size? Like, because I see something I kind of like on Apple that I'm not going to say should be worried, but trust the charts, trust the trend, trust the long time frame. I don't hate Apple puts. Not saying take them tomorrow, but we go to 15, we go to 30. This is a 30-minute over here on the right side. Push up, failed higher. Push up, pre-market, breakdown. Push up, failed, push up, failed. I actually like Apple. Not saying I'm gonna take puts on it, but so good news is you got a little bit of time and you're only down 20%. That's manageable. For me, it's not long enough to think a hedge because I imagine if you bought it did you buy it today? You're probably looking for profits today. If you bought 845, 1050. So my guess is you bought, I'm just going to draw a line here for simplicity. You probably bought somewhere in here. And now we pushed up and you're down a little bit. That's okay. So, your game plan should be, if you're following or watching, I got a one-line chart here just for quick reference. You can see price reaction. We sell down, we push up hard. Sell down, bounce originally. Sell down, candle closes, but big buyers push up. Sellers on the 30-minute, sellers on the 30-minute, 30-minute again, sell down. Okay. We don't trend down, but we possibly or hopefully didn't let those profits go from 86 to 110, but big buyback. So, rough number, I guess, to make it easy, 234. If we do a one-line chart on Apple, 234 is as River says, it's your line in the sand. 234. Under that, be bearish with a little bit of confidence, but look at, do not be afraid. If we bounce, we chop, and we break out of this trend line here, there's some rejection here, but it's this is where, when I say, I don't care if you have, I'm not gonna say you have time. Yeah, you have next week expiration, but if we bounce this again and break out and the market's moving, and we put to me, that's where I'm accepting a loss into this zone here. Draw it red. This would be a cut zone for me. Yes, you have next week. That's not a lot of time. Okay. But we trickle down here. We trickle down, push up, reject the first 30 minutes. One case says watch 234. We sell down, we push up, we start getting some 30-minute closes, hold with confidence. Okay. And okay, where's your profit target? Hopefully you got some figured out. You definitely want to look at these lows of the week. This week here, again, this is a 30-minute candle. This should tell you a lot. Bulls brought it down to here and a huge buyback up. When you see these huge wicks, you better be marking those wicks. That is a big buyback. That is a big buyback. Big buyback. Candle close.
Yo, 1K.
Big buyback. Big buyback. You better have a trade plan if we sell down and take some profit.
Yo, 1K.
What's up, man?
I have an open position open on FTAI. It's a swing trade. I entered last week. I bought 5 and I sold mostly all of them, and I'm just holding one runner. But I mean, it's gone up a little bit. But what do you think? Do you think it rejects here?
FTAI, is that right? FTAI. Yeah.
Yeah.
Okay, let me turn off these stupid indicators. I don't need that. I don't need them to tell me what it's doing. Well, is it an all-time high? What is this? Let's see. All-time high. Okay. All-time high. What does that mean? All-time high. Okay. Think of that. All-time high. Let's break this down. Start the one-line chart on the daily. I mean, where'd you buy it? What kind of profits are you in? I don't want to talk percents, but if you're up huge and you sold, you got to be thinking, week of 4th of July weekend, all-time high, hard rejection. July 5th was that Friday, push up, no new highs, push up, no new highs, push up. Okay. If someone tried to buy this breakout here, so say I alerted shares to everybody. Say FTAI, I'm getting shares $109. We sell down. Okay. You got to use the trader mindset. We're in shares. Shit. I alerted shares at the top. We're 12% red. Now we're pushing up. What is everybody's mindset when we get back to 109? What is everybody's mindset? Oh, break even, sell, sell, sell. You know why? Because that is a huge relief. We are red, well, more than 12%. We are red all the way down here, hypothetically, on shares. Okay. We are buying options because that is following the price of the stock. So if someone buys shares here and they're deep red, where do you think they want to sell at? Man, I'm getting out up here because I thought I was going to buy the top and I don't want to buy the top again. So damn, I'm getting out here. Okay. So Norvin, if you're going to swing this in tomorrow, you truly have them. 109, to me is the obvious sell. I'm selling every time at all-time high. Maybe it pushes more, that's fine. I guess I didn't ask you how much time you have on those contracts, Norton.
They expired on Friday. I only have one.
This
My
Friday?
deal
Oh
was
hell yeah, I'm selling. We push up to 109. Yeah, sell and move on.
yeah, I bought them at like 380, 350. And they're right now sitting at 12. So I'm pretty up a lot, but I've been following this name since 70 bucks a share. I told
Hmm.
Telio about it. So I've been following this name. A few other names I've been watching too, but uh in particular this name has been added to the IWM, the Russell. It's on the top holdings,
Hmm.
but I don't know if it has to do anything with.
I mean, yeah, we got this move up, man. Like I said, that's an obvious sell point for me for sure. Um,
All right, thanks, Ron.
Glenn,
Appreciate it.
yeah, man, glad to have you here, brother. Clandestine, to go over your question or comment again. Yeah, if you guys don't know this, I mean, I'm not gonna say it's secret, but this is where and how. When people say, I don't know how, I'm gonna go over this real quick and then we'll be done. When people say, I don't know where to take profit or how to set a trailing stop, use the option chain. Anything other than probably Robinhood will do this. If you're on Webull, you guys, the desktop, click on anything other than the bid or the ask. So other than the bid and the ask. So if you see me, I click on the mid. So going back to Clandestine's question here. So I'm gonna click on the mid, which is 0.70. And you can see here how that changes. That is now the options chart. So if we sell, this is kind of like not secret, but it's smart trading. So what I do when I figure out how to trail runners, again, I don't trade on percents. So Apple, say about Apple here at 8:15 my time. So 8:15 again is this candle here, right here, you guys. Say about the top, I got puts on Apple. I bought them at 73, perfect. All right. I'm coming down to this level here. I knew this was my zone here at 234. I knew 234 because my chart was a big level. So 234 at on West Coast. So 835 is this candle here. That lines up really nice. So if you're still watching Clandestine, pay attention. So you bought at 73, you sold here this support, and that value of where this candle was 86. Okay. So I marked that on the option chart at the bare minimum. So say I was in 10. I secure 8 here. We sell down here. Hypothetically, I hold a runner. I mean, if we sell down here, I'm going to be all out, but just hypothetically, we sell down. Okay, where's a stop out for good profits? I go back to this zone here. I check this candle. I say, okay, what was the value of this zone here? Was 86. So that's my stop loss for a runner. If you're like, you know what? We sold down here. I'm down to one runner. Boss just called me in a meeting. I don't know what a trailing stop should be. Boom. I'm pulling up the option chain chart, and that value is 86. So obviously the contract peaked down here at 110, 115. Boss called me in a meeting. I don't want to let this go red because what if Apple goes all the way back up here? Now you're red on a really, really good trade. That's stupid. So pull up the options chart and you go the 5 minute and you just compare time frames to that. That's the bread and butter, you guys, on how you trim stops, how you trail stops, stuff like that. Or same thing, we sell down and you're like, hey, where's the value? What is the value down here? So we sold down, we bounced. I want to get this zone down here low down Apple. Okay, same thing. Look at the contracts of Apple down here. That is this zone right here, you guys. This is fun stuff. That is this zone. This zone here on the puts goes up in value when the stock goes down. That's what this is here. So you go, okay, where do I sell? Again, same thing. Boss called me in a meeting. How do I get profit? How do I set a profit? Okay. I'm gonna set a reasonable take profit at 102 bucks. Okay. We sell down, boom. We sell through 102 and you get filled for a limit order $102. And you just made 42% trade. Okay. Use the option chain contract to your benefit, you guys. All right. Upstart, I think that was an alert. So I'm going to be cautious how I talk about it. Full screen. I think Eva alerted that. Man, it looks like it did good today. Hopefully that was in profit. I think, did she alert that yesterday or today? Whoa, nice moves Upstart. One line chart just to see where the hell we're at. What do? You zoom left. Boom. Look at that. One line chart. Where did it reject and close? Well, let's call it 32. You look left. I had no idea where that lined up. That's no accident, you guys. Again, you buy shares February 13th. You gap down. You're at a huge loss for 6-7 months. Where do you think you're selling at? You're selling at break even. Okay. Don't be foolish, you guys. Look left on charts. When you catch the bottom of this and you catch a run up, where do I sell? Where do I sell? Look left, you guys. One line chart. Look, even going back, look how much that 32 means. So to answer your question, Upstart, hopefully those are big profits, and hopefully you guys secured a little bit today. Guys, we are running very late. I'm 30 minutes over at 6:30 on my time. I know there's a couple questions in the chat. Please send me a DM if you want me to go over it, and I'll get back to you in the morning, I promise. But I gotta cut us off here. I'm always over. We're 30 minutes over. I really hope you guys learned something. This lecture is recorded if you want to go back and talk about anything else. But hopefully everybody has a good night. Like I said, my name is Start1K. Send me a DM. Doesn't have to be like on a friends list or anything. Just send the DM. I'll get it. Just say, hey, I'm in AMD calls. This is my expiration. This is my entry price. But you got to be a little bit honest. You got to say, hey, I'm in heavy. Hey, I'm not. I don't need to know your portfolio, but I'm going to need some information, because if you're saying, hey, I need help with this, I got to know what's going on. I got to know whether to say cut or, hey, you're okay. You have 3 months time. Let's figure out a hedge for you. So everybody have a great night. Let's get some wins tomorrow. Tomorrow's Wednesday. Hopefully get some good moves midweek. But yeah, everybody have a great night, you guys.